What if I told you that for less than the price of a coffee, you could buy shares in a company riding the biggest tech wave of our generation? While everyone's chasing Nvidia at over $100 per share, there's a hidden AI stock trading under $2 that could potentially explode. Today, I'm revealing exactly which AI penny stock I'm watching in December 2025, why it could multiply your investment, and how to protect yourself from losing everything. Let's dive in. First, let me be clear about why AI penny stocks are having a moment right now. Artificial intelligence is reshaping every industry, and companies are spending hundreds of billions building AI infrastructure. While big players like Nvidia and Microsoft get all the headlines, smaller, specialized AI companies are carving out profitable niches. These businesses create AI solutions for specific industries like security, healthcare, or voice recognition. Many trade for under $5 per share, which makes them penny stocks. Now, most penny stocks are garbage that will go bankrupt. But occasionally you find a legitimate company with real technology, real customers, and real potential to become something much bigger. So what makes a good AI penny stock? I have a specific framework. First, real revenue happening today, not promises. Second, a clear path to profitability with improving metrics each quarter. Third, strong gross margins above 50%. Fourth, sufficient cash runway without constant dilution. Fifth, insider ownership showing management confidence. And sixth, a specific catalyst that could drive the stock higher over the next 12 months. The AI penny stock I'm watching today checks many of these boxes. The company is Evolv Technologies, ticker symbol EVLV, trading around $2 to $4 per share. Evolv makes AI-powered security screening systems that detect weapons without requiring people to stop or empty their pockets. Think about concerts, stadiums, schools, and theme parks. Traditional metal detectors are slow, inconvenient, and not very effective. Evolv's technology uses artificial intelligence and advanced sensors to scan people as they walk through at normal pace, detecting actual weapons while ignoring harmless items like phones and keys. The system processes thousands of people per hour with minimal disruption, and it's already being used at major venues nationwide. Here's why this is interesting. First, they're solving a real problem in a massive market. The global security screening market is worth billions and growing, driven by increasing security concerns and the fact that metal detectors are outdated technology from the 60s. Second, Evolv has real revenue that's growing. In their most recent quarter, they reported over $25 million in revenue, up 29% year over year. Third, their business model is beautiful. Customers pay ongoing subscriptions for the AI software and support, creating predictable recurring revenue. Evolv's annual recurring revenue hit $89 million, up 64% year over year. Fourth, they're moving toward profitability. Management is targeting positive EBITDA by Q2 of 2025, just months away. If they hit that milestone, it's a major catalyst for the stock. Now let's talk about why the stock is cheap and what the risks are. Evolv went public at much higher prices and has fallen over 70% from all-time highs. First, revenue growth has been decelerating from triple digits to the high 20s%. This is normal as companies scale, but markets punish deceleration. Second, they're still losing money, and until they prove profitability, the stock trades at a discount. Third, they face competition from other security technology companies. Fourth, they've had some controversy around marketing practices and detection capability claims. And fifth, like all penny stocks, Evolv has limited institutional ownership, lower trading volume, and higher volatility. So why am I highlighting this stock, despite the risks? Because the potential upside significantly outweighs the downside if you size your position appropriately. Here's my thesis. First, the security screening market will only grow as venues and schools prioritize safety. Traditional metal detectors are inadequate, and Evolv offers a better solution. Second, they're still early in market penetration with about 800 customers, but tens of thousands of potential locations. Third, as they scale, unit economics improve dramatically. Once profitable, additional revenue drops mostly to the bottom line. Fourth, they have strong partnerships with major sports leagues and entertainment venues, creating social proof. And fifth, achieving profitability in Q2 2025 will completely change the narrative from speculative penny stock to proven growth company. Let me show you the potential. Evolv currently has a market cap around $600 million. If they continue growing at 25 to 30% annually and hit profitability targets, this company could be worth $1 to $2 billion within 2 years. That's a stock price between $7 and $13 versus the current $4. Wall Street analysts have an average price target of $5.35, representing 43% upside. 4 out of 5 analysts rate it a strong buy. Now, if this is such a great opportunity, why isn't everyone buying it? The stock market is forward-looking, and there's uncertainty around Evolv. Will they hit profitability? Will growth re-accelerate? Can they overcome negative publicity? Until these questions are answered, many institutional investors stay on the sidelines. This creates opportunity for individual investors willing to accept risks and take a position before uncertainty resolves. If things go wrong, the stock might drop another 25 to 30%. But if things go right, it could double or triple. That's a favorable risk-reward ratio. Here's how I would approach investing in AI penny stocks, like Evolv. First, never put more than 5% of your portfolio into any single penny stock, ideally 1 to 2%. Second, dollar cost average your entry over time rather than buying everything at once. Third, set clear rules for when you'll sell. I use a 25% stop loss to prevent bigger losses. On the upside, I take partial profits at predetermined targets. Fourth, do your own research. Read quarterly reports. Listen to earnings calls. Understand their business model. And fifth, be patient. These aren't day trading stocks. You're investing in long-term potential. One final warning. Be extremely skeptical of AI penny stocks without real revenue or products. Countless companies are slapping AI onto their name to pump their stock price despite having no legitimate AI business. Look for companies like Evolv that have tangible products, paying customers, growing revenue, and clear value propositions. If a company is all hyped with no substance, run away. Soto WAP. The AI revolution creates opportunities at every price point. Evolv Technologies, trading around $2 to $4, offers regular investors exposure to transformative AI applications in massive markets. Their security screening technology solves real problems. They have real customers and growing revenue. They're approaching profitability, and the stock trades well below where it could be if they execute. Is it risky? Absolutely. Could you lose money? For sure. But the potential reward justifies a small, carefully sized position if you understand what you're investing in. If you found this valuable, subscribe for more hidden opportunities. Drop a comment about your AI penny stock experiences. And remember, this is educational only, not financial advice. Never invest money you can't afford to lose. Do your own research and make decisions based on your own financial situation. Thanks for watching, and I'll see you in the next video. Claude is AI and can make mistakes. Please double-check responses.